On Business Incorporated today. World Bank upgrades Kenya growth rate. Ghana's consumer price inflation accelerates to 27.6% year-on-year. Credit ratings agency Moody's reviews South Africa's Transnet for downgrade. Hello and welcome to the program. I'm Amy John Mekwa. Well, let's start off as usual with market performance as intraday beginning with major equities in Africa. Nigeria's NGX has recovered from yesterday's dip. At intraday, the index was marginally positive. Our JSE of South Africa was on the flip side. It had shed 0.19% at intraday. More than 0.5% is how much the market had lost in Egypt by noon, and Kenya closed in the positive territory yesterday. Let's move over now to the markets in the Middle East, which was mostly in the negative territory at intraday. Abu Dhabi declined by over 0.5%, but Dubai's loss was even more at 0.72%. In Saudi Arabia, the Tadawul index was also shed, while the Qatari market index gained more than 1% at intraday. We move to Berlin now in Europe with Janelle joining us to bring us up to date. Hi, Janelle. Good afternoon. But there's been a lot of conversation about the ECB that has been slow to follow other central banks with regards to tightening monetary policy. What do we know about that?
Indeed, a speed in responding to inflation with a rate hike has been the key difference between the European Central Bank and the U.S. Federal Reserve or even the Bank of England. The Fed and the Bank of England also stopped talking about inflation being transitory before the ECB did. They also both raised rates months ago. To be fair to the ECB, however, it can be argued that the European Central Bank has a much harder job. The currency zone is made up of 19 countries in differing states of economic health. Europe is also much more heavily dependent on Russian energy sources. As such, it's also much more exposed to the chain reaction triggered by higher energy prices. And even then, the rate of inflation diverges widely among countries in the Eurozone. The bloc's inflation hit 8.1% in May, but it was 20.1% in Estonia and 5.6% in Malta. Given all of that, it really is then quite difficult to find a one-size-fits-all policy approach. But obviously, high inflation and a negative interest rate is just not a sustainable state of affairs, and the ECB will have to be able to balance supporting demand and managing inflation.
Exactly, a lot of balancing for the ECB to take into consideration now, and the central bank faces quite a few risks down the line. Take us through some of them.
Well, again, Eurozone countries aren't all the same in an economic but also fiscal sense. And now the oft-repeated phrase here is fragmentation risk. And that has to do with making sure those differences don't become more entrenched or more pronounced. A key concern, for example, is that a rate hike would leave countries with high public debt like Italy particularly vulnerable. That could be why the European Central Bank has signaled that help would be available for countries that are in this particular bind. But of course, there's also a lot of uncertainty. I already spoke about how exposed the Eurozone is when it comes to economic risks arising from the war in Ukraine. But that is a situation where there is definitely room for it to get worse. The war can get more intense. Russia can cut off gas supplies to Europe completely. No one knows what is going to happen in this regard, and the ECB has the impossible task of covering every eventuality as best as it can.
And let's look at the markets now. What sentiments do we see permeating the market?
this will probably come as no surprise, but shares are down today in Europe because of this European Central Bank meeting. The announcement was widely anticipated, but because of all that uncertainty, the ECB has maintained a lot of room for investors to guess as to just how much and how quickly things will happen. But without a lot of change in the material conditions, in the Eurozone, we have a low consumer confidence amid higher energy prices and inflation. Investors are unlikely to cheer up significantly. I've seen one analyst call this a gloomy summer for global stock pickers, and today that picture definitely seems to stand.
Well, not an happy way to end up, but Janelle, thank you so much for that update. We'll hook up again tomorrow. Let's move to London now, where Juliana is standing by, and a major conversation in the UK at this time is with energy firms. Ofgem is criticizing them for unacceptable time taken to restore power to many homes. And then, of course, there's the threats of more storms, Juliana.
Good afternoon, Innie. Yeah, that's right. I think extreme weather patterns are expected to become more frequent here in the UK. And if people in the UK, our viewers who are here, can cast their minds back to autumn last year, we did see a bat of extreme snow, extreme wind, extreme rain. And of course, this does affect most people, but particularly if you are from some of the counties in this country who are affected by Storm Arwen. That hit in November last year, and it wiped out electricity from about 1 million homes, and for 4,000 residents, they were left without power for about a week. There were so many outrageous calls and criticisms of the government that the energy regulator, Ofgem, did decide that they would conduct a probe, and they have been doing that for the past 6 months. And just today, we have found their conclusions, and they have said that they do think that there was inadequate information and misinformation given to customers. They have named a few, but I think the one that sticks out is the Northern Power Grid. I think energy bosses are quick to say that they did make sure that all customers were compensated. I believe that they paid out a tune of £13 million for each energy provider to all of the customers in compensation, as well as a further £10 million in voluntary redress. But for some residents who do live in some of these towns, they don't believe that Ofgem's findings do enough. There's no point, they say, in just pointing out some of the failures and the fact that vulnerable residents were left without power, and more needs to be done. They say that the British government really need to tackle the poor infrastructure. So it's not the fact that people needed help and they weren't given help. Residents who live in those regions say that these companies just didn't have the capacity to help the individuals. So it's a big case, not mainly for people who live in London, but certainly for the people that live in the north of the country.
Yeah, every country needs infrastructure, investments in infrastructure everywhere. Let's head to the markets now. How's that looking at this time?
Not great, because as we discussed this morning, Innie, we had a pretty grim outlook yesterday from the Paris-headquartered OECD. They slashed global growth from 4.5% to about 3%. Not great. In fact, it's even worse for the UK economy, because apart from the US and the Eurozone, we are expected to stagnate next year, so no growth whatsoever. And then, of course, we've got that house pricing data, which is really causing alarm for the British government. The fact that house prices are going beyond control. The British government are trying to find ways to get first-time buyers on the housing ladder. That means red is the colour of the FTSE at intraday. The all-share is down 0.35%. The FTSE 100 down 0.37%. And the FTSE 250, the domestic market, down by 0.14%. In the currencies market, the British pound is currently trading down on the US dollar by 0.02%, though up on the euro by 0.01% and down on the Japanese yen at intraday by 0.67%, Innie.
Thank you so much, Juliana. I wonder how the market will react tomorrow. We're expecting U.S. inflation, and I know the whole market just jump all over themselves over that, but we'll find out tomorrow. Thank you so much. Enjoy the rest of your day.
Thank you.
Let's move to Asia now, where Pacific stocks were mostly lower in today's trade, with mainland Chinese market falling despite the release of better than expected May trade data. The Shanghai Composite in mainland China slipped 0.76% on the day to 3,238.95, while the Shenzhen component dropped 1.85% to 11,810.58. Hong Kong's Hang Seng Index shed around 0.9% as of its final hour of trading. Sentiment surrounding the COVID situation in mainland China may have dampened investor sentiment as the government announced that parts of Shanghai will reimpose new COVID restrictions. In Japan, the Nikkei 225 closed slightly higher at 28,246.53, while the Topix index dipped fractionally to 1,969.05. South Korea's Kospi ended the trading day mildly lower at 2,625.44, while in Australia, the S&P AX 200 dropped 1.42%, closing at just over 7,000. MTSI's Broadex Index of Asia-Pacific shares outside Japan traded 0.64% lower. In the United States, futures were slightly higher in early trading after the major averages ended Wednesday's regular session lower and U.S. Treasury yields rose. Futures on the Dow Jones Industrial Average traded 103 points higher. S&P 500 and Nasdaq 100 futures gained 0.4%. Meanwhile, Tesla rose 3% after UBS upgraded the stock to buy. The firm also said that electric vehicle maker can rally more than 50% from current levels. Shares of Five Below dropped more than 7% in the pre-market after first quarter sales came in softer than expected, and the retailer shared weak guidance for the current period. Yesterday, the Dow dipped 269.24 points, that's 0.81%, almost 1%, to over almost 33,000, while the S&P 500 shed 1.08% to close at 4,115.77. The Nasdaq Composite slid 0.73% to finish at over 12,000. In the oil space now, prices hovered near 3-month highs today after parts of Shanghai reimposed new COVID-19 lockdown measures. The news of China's stronger than expected exports in May boosted the demand outlook. Brent crude futures for August dipped 29 cents to $123.29 a barrel, while U.S. West Texas Intermediate crude for July was at $121.76 a barrel, and that's down 35 cents. Both benchmarks closed yesterday at their highest since the 8th of March, matching levels seen in 2008, when China's May exports jumped 16.9% from a year earlier as easing COVID curbs allowed some factories to restart. And that's the fastest growth since January this year, more than double what analysts expected. In the metals market, gold prices were slightly down, restrained by a rise in Treasury yields ahead of key U.S. jobs and inflation, which is due tomorrow. And this could influence a Federal Reserve's rate hike roadmap for fighting inflation. Spot gold was down 0.2% at $1,850.44 per ounce, while U.S. gold futures eased 0.2% to $1,852.70. U.S. weekly initial jobless claims data is due later on, and spot silver was flat at $22.03 per ounce, while platinum fell 1.2% to $993.50, and palladium rose 0.4% to $1,950.16. Let's take a break now. When we come back from that break, we have lots of stories for you from the African continent. So stay with us. This is Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. Let's start from Kenya. Kenya's gross domestic product is projected to grow by 5.5% in 2022 and 5.2% on average in 2023 to 2024. And that's compared to an earlier projection of 4.9% in December. According to the World Bank, the growth rate, while still strong, will be a moderation compared to the 7.5% growth in 2021, following a remarkable recovery from the economic effects of COVID-19. And staying in Kenya, Kappa Oil Refineries Limited, the manufacturer of Rena vegetable oil, has suspended some of its operations, citing limited raw materials. The cooking oil manufacturer noted that the dollar shortage rations its acquisition of imported raw materials and disrupts its operations. Kappa Oil revealed that it is operating below the capacity of production because of the suppression of supply chain for crude oil. The manufacturer of soap detergent Horse warned of further consequences in its operations if the dollar situation is not arrested. Now let's get to our commodities market segment, and today we're talking about lumber. In recent report by Wall Street Journal, a global price of lumber has fallen by over 50% in the last 12 to 15 months. The July futures closed at $695 per board feet, 52% lower than it was at this period last year. What's responsible for this? We'll find out now with Toyo Iweton. He is a financial associate with Financial Derivatives Company. Hi, Toyo. Good to talk to you again. Good afternoon.
Good afternoon.
So what's responsible for this sharp decline?
Well, given that most commodities right now are having price increase, right, especially with the Russian invasion in Ukraine. But then we can see that lumber is not, Ukraine and Russia are not part of the top 10 exporters of lumber product, that's wood. So what I'll attribute to this hike in price is the recent increase in the interest rates in order to address the inflation situation. Because when you have an increased interest rates, right, it's going to kind of discourage borrowings. And when you're unable to borrow, you would have less cash to spend, thereby reducing the demand for lumber products. And the products that come out of wood, I mean, your actual furnitures and then housing equipment and the likes.
All right, so Nigeria is in this space. It's the second highest country in the world in terms of deforestation. A combination of factors are responsible for this. And of course, this compounds the problem of global warming. And environmentalists would not like to hear this. Lumber is a direct product from falling trees. Now, Nigeria is a major importer of lumber and furniture. So it doesn't seem to add up so much. Is there a way to turn the situation around?
Well, I mean, just like you said, well, the lumber products, if you look at the geographical position of Nigeria in terms of Ondo states, Benin, Delta states, you have large forest reserves over there. And with the ever-growing real estates that's going on right now, we're seeing a lot of felling of trees in order to create space for buildings and then also for exports. But right now, I think we should be looking out for alternative to wood in terms of creating our furnitures like the fiber cement, the plastic and the bamboo. So at the moment, Nigeria is actually doing its beating because we just recently see the CO26, especially with the CO27 coming up in Africa. We're really looking out to curb the deforestation that's currently going on in order to play our parts in curbing the problem of global warming.
And then furniture is usually purchased by those who are actively employed. The U.S. unemployment rate is at an all-time low, 3.6%. Why then is the price of lumber falling when the demand for furniture should actually be increasing?
Like I said, you expect that demand might increase, being that
Hello? All right. Sorry, I think there's a problem with the network, Toyo. I don't know. Can you hear me?
Yes, I can hear you.
Okay, but your audio is not clean. So maybe you should log out and come back in. I hope we will still be able to accommodate your views on the program. I think that sounds like a network issue. So let's move on now. In Ghana, consumer price inflation accelerated to 27.6% year on year in May, and that's from 23.6% in April. It's a new high, 18-year high. And according to the Statistics Service, this means that in the month of May 2022, the general price level was 27.6% higher than it was in 2021. And I bet you the happenings in Ukraine has a lot to do with this. The Ghana Statistical Service also indicated that month-on-month inflation between April to 2022 and May 2022 was 4.1%. The data also indicated that food inflation was up 30.1% from 26.6% last month. And month-on-month food inflation was 4%. The data, oils and fats, water, cereal products, and fruit and vegetables juices have seen largest increases in the year. We head to South Africa now. The credit ratings agency Moody's has placed South Africa's state-owned rail network Transnet credit ratings on review for a downgrade. Transnet has a $1 billion international bond that matures next month, but currently doesn't have sufficient funds to repay bondholders. Transnet only had around 1.3 billion rand of cash on its balance sheet and will need to pay bondholders 23.5 billion rand as more bonds mature until March 2023. Moody's says that the delay in securing the refinancing commitment has raised concerns around Transnet's financial policies and governance, which added to its unease about weak compliance and reporting. All right, let's move now to Egypt, let's stay with South Africa just before we go to Egypt. South Africa's Business Confidence Index, compiled by the Bureau for Economic Research for the second quarter of 2022, fell from 46 points to 42 points as the devastating floods in KwaZulu-Natal and higher costs of doing business slowed manufacturing production. The BCI plunged to its lowest in 1 year after recording similar levels in the second half of 2021, as various shocks over the past year contributed to keeping confidence this low, and many uncertainties remain. Although manufacturers and new vehicle dealers experienced a sharp deterioration in sentiment, building contractors, by contrast, turned decisive, more upbeat. Now we can go to Egypt and we look at their exports. Their exports to the United States increased by 56.3% in 2021, and it got them $2.5 billion compared to the previous year. That was 2020, $1.6 billion, and that's according to the Egyptian Central Agency for Public Mobilization and Statistics. The exports of ready-made garments ranked the first place of exports to the United States, reaching $1.2 billion, compared to less than that, $800 million in 2020. That's an increase of about 50%. U.S. exports to Egypt jumped 27.1% to $6.1 billion in 2021, representing 7.4% of Egypt's import from the world, compared to $4.8 billion in 2020. Well, imports of grains, oil, fruit, and medicinal plants came first, with 26.8% of the total imports from the U.S., reaching $1.6 billion in 2021, compared to $1.5 million in 2020. That's an increase of 6.7%. Islands, we do have Toyo now. Hello, Toyo. Can you hear me now?
Yes, I can.
Okay, so you're about to, just less than a minute because you're almost off the show. You're just about to explain why we do have unemployment drop, but the demand, seems not to be following the trend as expected.
Yes, just like I was saying, you'd expect that the demand should rise, given now that people are gainfully employed. But then I would like to put it to the phone that furniture products, right, are non-necessity goods, because at the time you buy them, you're buying in terms of when you're about to build, when you're just moving into houses. Because right now we are having the high inflation and then high borrowing costs caused by high interest rates. So consumers are kind of going to have priorities in terms of their spending, creating opportunity skills, and that will actually going to reduce the demand for furniture products, thereby reducing the demand for lumber.
All right, Toyo Iweta, thank you so much for sharing your thoughts and perspective with us on the price movement of lumber in recent times. Enjoy the rest of your day.
You too.
And so you wraps up the program today, the Thursday edition of Business Incorporated. It's one more to go tomorrow. Ini John McQuay. Enjoy the rest of your day.